Now we are going to computation computation of roll over relief. Okay, so when you are doing this, um, all items and figures are already in the question. Okay, so you were to make like in our question we have item number one is building building. Okay, you building is the item, then the currency according to the question is naira. Okay, so proceeds from disposing the building. The proceed is 30 million naira. Then we have the cost of acquisition. Okay, so initially it was acquired at 25 million naira. Okay, so there is a capital gain here of 5 million naira. Okay, is it a gain? Because the process is higher than the cost of acquisition, so it's a gain. So we have the capital gain for the 5 million naira. We close it first for the building. Then you have to less the rollover relief. These items and the amount are already in your question. Okay, okay. Um, so the things you have to less now, you have to less roll over relief as follow. Okay, the lower of the following. The following items will be less. Less means deducted. Okay, so we have the amount reinvested. As I told you before, all items and all figures are already in question. In some scenario, you have to work it out. But now we are picking from the question. So actual sales proceed. That is the actual amount that the item was sold for is 30 million, which you already see up here already. Okay, so you have to less, that is deduct the cost of acquisition. Same thing we did here before of acquisition, which will give you 25 million. Then the capital gain that you roll over, okay, is 5 million, which is this capital gain. It was rolled over to give you 5 million. You are deducting it then. So, but the balance liable to tax is nil. There is no balance. Okay, so capital gains tax payable at 10% is nil. There is nothing to be paid because here is nil. The balance liable to tax is nil. So the gain taxable is nil also. So for the building is nil. Okay. So now we go to the equipment. Just wait a moment. I'm trying to check out something. Okay. Now we go to equipment. Equipment. In the previous video, we did the computation of capital gain tax. Now is computation of rollover we are calculating now. So if you want to know about the capital gain tax, you check my previous video. So the equipment now, you put the naira sign as usual. Okay. So the proceeds from disposal proceeds from disposal is 3,500,000. Okay. And cost of equipment cost of equipment is 5 million. See, the cost of equipment is 5 million. Okay, 5 million. And when you make the deduction, there is going to be a loss here. The loss is you are taking this from this to give you 1,500,000 lost. Okay, it's a capital loss. Capital loss. It's a capital loss. So the rollover relief now is going to be nil. Rollover relief. Rollover relief is nil. And capital gains tax. It did not gain anything. No money was gained. If you gain, it's supposed to be at 10%, but there is no gain, so it becomes a nil. Okay. So you will have to note that a rollover relief is applicable where the company gain have been fully partially reinvested in replacement of an asset for the purpose of the company business. Okay, so if it has not been replaced, the relief cannot be recorded. So that is it for these two items. Okay, so now we have computation of rollover relief. In the question, we have building, we have equipment. There is also generating set, but same procedure that you use for this building and this equipment, same procedure you will also use for the generating set. If you can get the question from the Pathfinder, page 200, from page 280 to page 283, you can get the question there and solve the other one by yourself. So when you are computing rollover relief, you have to bring in the proceed from disposal, which is 3 million, the cost of acquisition, 25 million. When you deduct this from this is your capital gain. Okay, you less the rollover relief, then the lower of means you are deducting you are bringing the list of the other items where it was reinvested. That when the building was sold, it was another building was bought. Okay, reinvestment. You see it, 65 million. As per proceed is 30 million, which is the same this, and the cost of acquisition 25 million, which is the same this. A capital gains rollover, which is this gain here. You see, so balance liable to tax is nil. As you can see, it has to be nil. This is everything that was done. This is what that was reinvested. So it's not possible to pay a tax. Okay? Because even this gain has, you can see, okay? Capital gain tax payable is nil because the liability is nil, okay? Capital gain tax would have been 10% if they were to be paying. So since it's nil, nothing is there. But if we were to read that the amount is high enough for a tax to be paid, it's supposed to be 10%. Okay. So the same procedure as I've already explained, that is how it goes to the equipment. Equipment proceed from disposal 3.5 million. Cost of equipment is 5 million. Capital loss. The capital loss is coming from when you deduct this from this, you have a negative one, a negative answer, which is a loss. 1.5 million naira loss. You made a loss, so definitely the rollover relief is there. You are not paying anything because you make a loss. So if you to be that you make a profit before, the tax is supposed to be 10%. Okay, so that's why we just put the 10% here. But since here is nil, here is going to be nil. If here has an answer, we would have taken the 10% of this answer and put it here. But since there is no answer, it is a nil. Okay. Have a good day. This computation of rollover relief.